Good morning. The old man here, 8/29/25. What I'd like to talk about today is a couple videos I watched last night and this morning. Last night I was watching Peak Prosperity, and one of the videos he was talking about is the housing market rolling over. And that's not a good sign for the economy. I know a lot of guys have been talking about it. It's coming, it's coming, it's coming, and it never seemed like it was getting here. Well, it's here. It's starting to come now. He's talking about 500. I want to say 500,000 homes hitting the market right now. There's 500,000. Yeah, 500,000 homes on the market right now. And that's the most there's been in quite a while. And keep in mind that these homes are with the interest rate still fairly high, people are going to find it difficult to finance those homes, especially at these prices. They're still overpriced. And the one thing we've found, or you'll find, is with major supply coming on, which there is, and I think you'll see that by the end of the year, maybe even not till spring, but you'll see a significant more homes come online. And the more there are, the more those prices will come down. Not only will interest rates come down on the short end at least, and that may or may not affect the 10-year, and most of your home loans are derived off the 10-year. You pay so many basis points over that. Like say the 10-year, if the 10-year is at 5, you're probably going to be paying around 7%, something like that. So I don't necessarily see interest rates coming down in the 10-year. May or may not happen. Most are saying it if they drop short-term interest rates by 300 basis points or 3%, that the long-term or the 10 years is actually going to go up. We'll see. I think that's very possible, but we'll see. They've got all kinds of tricks up their sleeve. If the 10-year gets higher than they want it to be, the central bank or the Fed will come in and buy as many of those 10 years as they need to keep the mid-range of the interest rates lower. So they can manipulate both, the short term, and they can manipulate the 10-year as well. We'll see how that works out. But the main thing to realize is there's, already 500,000 homes on the market, of which is a hell of a lot. So for the hell of it, last night I went on Realtor.com and was looking at mostly, I set my parameters at $400,000 homes because that's what they say the average home in the United States is. So I set my parameters at 400,000. And when I did that, I seen homes that have been on the market for quite a while now, and I've seen homes that they had dropped $50,000, $60,000, $70,000, and that's with the housing just starting to roll over. So some of these houses that have been on the market haven't sold. They've dropped them by 50, 60, 70,000. Now, as more homes come on the market, those homes that have been on the market have to come down even farther or they're not going to sell. And that's what we're going to see. We're going to see more and more and more of that. So we are already seeing housing values drop Now, this is Michigan, so your state, your area might be different. I'll give you that. But overall, in the United States, with that many houses coming on the market, whether those are new houses or used houses, it really doesn't matter. Um, you're not going to stay at these all-time highs anymore when you get that many houses coming on the market. So we'll see how that works out. I think you're going to find that that market's going to roll over pretty quick. It may be by the end of the year, but we may not really see major effects until springtime. Hard to say. But the next thing I want to talk about is the stock market and the tech stocks. Of course, we know have been blowing things up for years. Right now, NVIDIA is at a PE ratio of 50, and throughout history, PE ratios of even some of the best companies in the world, or the country, I should say, I'm referring to the United States for now, but some of the best PEs have been as around 18 to 20 PE. That's price to earnings ratio, and if you don't know what that is, it's basically the price divided by the earnings on that stock. And it would, in other words, if it stayed there, you'd be at, if, with a PE of 18, it would take you 18 years to get your investment back. In other words, if you paid $100 a share, it would take you 18 years to make $100 on that through derivatives. And so that's normal. You're hoping at that point that not only does the stock rise by, let's say, at least the inflation ratio, but it'll also pay you back dividends as well. So that is normal. 18 to 20 PE is normal for good companies uh, at a fair price. Now, there's times where things are way undervalued, especially after a crash. The mining stocks have been in a bear market for a long time, and you'll see a lot of the mining stocks down around a PE of 5, 6, 7, maybe even 8 and 10, of which means they are undervalued as far as stocks are concerned. They are undervalued. So with it, with a PE of 50 in NVIDIA, that means with the price versus the earnings, if you just sat on that stock, it would take you 50 years to recoup your investment. Well, nobody's holding on to a stock hoping it is going to, just sit on a stock and wait 50 years to get your money back. That doesn't make any sense. But what most people are doing is hoping this is, and I think most people are doing is looking at it as a lottery ticket, and this thing's just going to keep going to the moon. But it doesn't make sense. Financially, it just does not make sense. A PE of 50. The others, I think, are hoping that it goes from a PE of 50 and they start making a lot more money than they have been. And you'll see it go from, let's say, a PE of, over time, a PE of 50 to a PE of, let's say 40 or 35. And then over time, it drops to a PE of, so they're, in other words, their dividends, they're making more and more money. You still only got, X amount into your stock. They're making money and they're paying you back faster, or they're paying you faster, higher dollars on your investment. So therefore, at the end of the day, your investment will be paid back quicker. However, I don't think that's going to be the case. I think, well, obviously, you can watch a billion people right now telling you, and you can look at the charts and see that we're in a bubble. And if you stop and think about it, am I going to see the price of NVIDIA double in the next 5 years? What do you think your odds of the NVIDIA doubling in the next 5 years or being cut in half in the next 5 years? I think it's a lot greater, and I think a lot of other people do too, especially insiders that are selling at record amounts. They're betting on the fact that it's more likely to trade at half its price in the next 5 years as to double in the next 5 years. So that's telling you that's a bubble that could pop at any time. Honestly, I think all we're waiting for, as I alluded to the other day, is a black swan event, something that really triggers shit off, whatever that is. I mean, there's so many black swans out there right now, or so many things that could become a black swan that either nobody or hardly anybody's looking at. And if your investment portfolio is all about risk, and the more risk that you see in anything, you should be getting out of that, if not all at once in some cases, but at least, take some profit off the top of the table. If you've been in NVIDIA for the last, let's say, 5 or 10 years, you're up a ton. Take some profit off the top. Take 20% off, 25% off the top. Invest that in something else that has growth potential. Find something that has that potential to grow in the next 5 years rather than the potential to decrease in the next 5 years. I think anything in the stock market has a lot greater chance of being cut in half in the next 5 years than they do in doubling in the next 5 years. I mean, if you ask me, if you're in this kind of a bubble, and if you ask most anybody that's into finance that really knows what the hell they're looking at, you'll see that. But what I find funny is all of these guys that are even conservative portfolio managers are still trying to keep you in the stock market. Oh my God. If you were on the train and you knew the train was going to crash, and at the head of the train you know you're going to get killed, and at the back of the train there's only a 35% chance of getting killed, still it's 35%, or you could just get off the freaking train. Which would you do? I think you'd get off the freaking train. But these portfolio managers can't have you getting off the train. They don't make no money. They say they can hedge your, whatever you're invested in. They can hedge your bets, if you will, because that's all you're freaking doing is betting. But they can hedge your investments that if this part of your portfolio goes down, this part should go up. Well, in an extreme bubble, what if everything comes down? It's just that some come down, like something that's got a PE ratio of 50 comes down to 30, and the one that should have backed you up goes from 25 to 20. Yeah, it's doing better than NVIDIA, but it's still down. And this stock market is the reason it's in such a bubble. Well, there's many reasons, but one of the many reasons is because it's so highly leveraged. There is so much debt in the system. That when this bad boy pops, there isn't nothing safe. There's nothing safe to be hiding in, not in the stock market. I was watching a channel the other day that's called Stacking University. I've followed him for quite a long time, and his basic concept, and what I like about it is he's teaching basically stackers and investors at a very, let's say, simple level, that if you're not if you've not been stacking or investing for the last 30 years, you can understand what the hell he's talking about. He doesn't use a lot of big words or acronyms or whatever else. He kind of breaks it down pretty damn simple without treating you like a child. Although sometimes I think we need to be treated as a child because we've been intentionally kept so ignorant about the stock market. They want you ignorant. They want the big players want you stupid and manipulate you. And that's very easy to do if you have next to no knowledge, and that's where they want you. And that's where most investors, I think, are. Most investors today are passive investors. In other words, they just invest through their IRA, and then somebody invests that money for them. And that person, I can guarantee you, doesn't have their best interest at heart. You would do a much better job of investing that money yourself if you were educated in such, and most of us aren't. I'll have to admit, I mean, until 2 years ago when I started investing in silver and then gold, and then I started second guessing myself whether this was smart or not smart. So I just did the deep dives. I watched videos that I didn't understand half of what the hell they were talking about. And then anytime there's the term or an acronym that I didn't understand, I wrote that down, and then I went and Googled it, or used AI, one way or another. I used that to to understand those terms. So as each video I watched, I understood more and more of each video. And then sometimes I went back and watched the same video 2 and 3 times till I understood it. And each time that there was something I didn't understand, I wrote it down, researched whatever they were talking about, and then came back and watched the video again to put all these pieces together and make them make sense. Uh, I think most of us don't want to wreck our brain that hard. However, I actually enjoy it. I find it very knowledge to me, especially when it comes to math. I love math. I understand math. I'm by no means a math genius. I'm not a math scholar. I just understand the math. And anytime I don't understand the math, I can find the equation to get me there. So not a big deal. And, I enjoy it. So that's all I can say. I can watch this. I can watch investment videos and silver videos and gold videos and whatever else. I can watch all of these. And then what you got to throw in for good measure is understanding psychology. And psychology is it's a very important part of investing, but it's also it's a very important part of understanding investing is psychology and what are people going to do. And sometimes, or nowadays, a lot of these investments, especially these passive investments, are actually traded by IA, or artificial AI. God damn it, I always say that backwards. But are now done by AI. In other words, they got stops and starts and whatever, buy in here, sell there. That's all set up by an algorithm that does it automatically with these passive investments. And that's all well and good as long as it works, but someday that's not going to work. And one of the things that can bust that bubble is the housing market going down and money starting to move in a different direction. But not only the housing market, but then the stock market as well. There is some point where you got to look at this market and say it's in such a bubble that there's only very little upside, but there's a whole hell of a lot of downside. And that's all part of if you understand that let's say if I'm looking at just Nvidia, that I think it's got at best it's got a 10% more upside. And if it cuts in half, it's got a 50% downside. And I think cutting in half is, in other words, coming to a PE ratio of 25 instead of 50. I think that's very possible. And normally, when something like this happens, it's not going to stop at 25. It's going to go way well below 25, and then over the next few years, come on back up to where it should be. So I think it's actually going to overshoot to 25, possibly get down to a PE ratio of, let's say, 18, 20, something like that. It may shoot below or below that, but let's be, reasonable about it and say it comes down to 25 PE. Well, if you're in it today at a 50 PE and it drops to 25, you could be years before you even come back up to where it sold off at. But even if let's say it takes 25 years to get back to where it sold off at, you're still not even, because that over 25 years, your dollar's been devalued by X amount every year. They're saying 2%, but I think it's bullshit, and I think a lot of other people think it's bullshit. And let's say it's more like 7 or 9%. I think since the beginning of 2000, gold on average has been doing about 9.8% gains per year, and I think that'll show you the amount of inflation we've had over the last 10 years. If you've owned gold since then, you haven't gained that much really at the end of the day. If inflation's been, let's say, 9% and gold's been 9.8%, at least you're up in purchasing power. But if you're in anything that's paid less than 9%, you're down in purchasing power. Now look at the other side. If you look at gold and silver, where central banks, countries, people, individuals, or if you will, consumers, let's say consumers, and large investment families uh, and what have you across the world are turning to gold and not only de-dollarizing, of which is a big deal to U.S. citizens, is the fact that everybody's starting to de-dollarize, but they're also fiat currencies across the world. Everybody's getting out of it to some degree. All it's got to do is shift. It doesn't have to be all or nothing. It's a shift. If large companies I want to say large companies, let's say large investment families, if they go from as 0.5% gold in their portfolio, and they think, well, this market's awful risky, and I got to hedge my bets. I better be loading up on some gold. And instead of 0.5% of my investment or my portfolio is in gold, 0.5% is in gold. Maybe I need to go to 5, or maybe I need to go to 10%. Maybe I need to go to 15 or 20%. Central banks' goals, and most of them aren't there yet, but their goals are at 20%. And they're all working on it. They're all working on getting 20%. And if they're in the BRICS, word is, and I don't know how true this is, but word is, they need to be at 40%. So the BRIC countries have got a really long ways to go. What's that? That's an upside for gold, period. An upside for gold. Now let's talk about silver. Silver's got a much smaller market cap than gold, mostly because it's been consumed over the years, and therefore the market is a lot smaller because it's been consumed. But yet, because of investment strategies over the last 20 plus, maybe 30, 40 years, stocks and bonds have been doing so good that most people have not invested in mining. So if you listen to a lot of people, and I think most of them are right, that compared to the demand for silver, and that includes, solar panels, EVs and whatever else, and in now investment. So investment's going up, the demand for silver and investments going up, and the demand in solar, like I said, solar panels, EVs, blah, 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 blah. And if you believe the narrative of artificial intelligence, that it's going to use so much power to push this artificial intelligence, or to supply this artificial intelligence with electricity, well, there's a lot of a lot of silver consumption in itself. So this all shows that demand is on its way up, supply is on its way down, because we haven't invested in silver mines, of which silver is becoming more and more expensive. Not that it's not there, it's there somewhere. But first of all, you got to find it, then you got to mine it. And then if silver's at $20 and it costs you $25 to get it out of the ground, well, you just leave it there. Fuck it. Doesn't make sense going after it. So you move on. You try and find a higher grade mineral deposit. Well, when silver gets to what some will think is an astronomical value, then it'll make sense to start bringing some of these smaller mines back on board, or back online, or maybe they found it, but they never really did anything with it because it didn't make sense. Now they can go back and start mining that. The problem is it's going to take 15 to 20 years by the time you get it permitted. You start, you build a mill and the infrastructure and everything else. We're a long ways away, even if you conservatively said 10 years away. Well, we're going to use a hell of a lot of silver in the meantime. And there's already been a 5-year and some will say 7-year deficit. In other words, we're using more than we are mining. Okay, it's not to say there's no silver. There's plenty of silver. But somebody's got to decide if industry needs it worse than investment needs it. Well, investment's holding on for dear life. And as the dollar figures come up, some people will start turning loose of that silver. But some really strong hands that have got the memo and know what's coming and know what's going on, they'll hold on to that silver. And that's just going to keep that price going up. Besides that, last week, I believe, or not too long ago, let's put it that way, the U.S. just added silver to its critical metals, or let's say critical metals list. What that means is, if it's critical mineral, there's the word I was looking for, if it's a critical mineral to the existence of the United States, that means we need to start stockpiling it. That's something we got rid of back in the 50s. We basically got rid of all of our strategic silver back in the 50s because we manipulated the price of silver. We could buy silver so cheap that it didn't make sense to stockpile it. Now with this deficit and nobody investing in it over the last 15 or 30 years, or not enough people investing in it, and the price being so low that it didn't make sense going after it. So we're so far behind the curve that now, to make up for time, we're going to have to dump a lot of money into it and try to make up for time. But in the meantime, the demand is rising. The supply isn't really rising, not to the level that the demand is. So something's got to give, and that what something is price. They're not going to be able to manipulate the price of silver too much longer. I think we're going to see significant gains. Some will promise you all of these different prices. I'm not going to do that. But what I am going to do is tell you that in the 70s, when we deregulated silver and gold, that the Americans started stacking it, that silver was down around $1 an ounce in 71. It was in that neighborhood, give or take a little bit. Okay, and by 81, from 71 to 81 in one decade, it went to $50. That's a 50x, right? Or thereabouts. Even if it didn't exactly start at $1 and it was even $3, that's still a hell of a gain. I think for so many reasons, there is already a shift from certain assets to other assets that you're going to see silver continue to do the same. And even if we got a 30x, and you say, okay, 30x, but starting where? Well, in my opinion, a 30x from the time Trump was elected. So from December 8th, or November 8th, excuse me, of 2024 forward, let's say roughly that was $35 silver, just for good round figures. I think it was actually more than that, but let's call it 35. What if it does a 30x from here? That's how important I think it is to stack silver. Gold is also going to do very well, but gold is not in the deficit that silver is. Gold has been mined, it's been profitable. It'll only become more profitable to mine gold, so they will mine more gold, but that'll somewhat curtail the price of gold, somewhat, not entirely, because the demand is going to go way up, the price is going to go way up. But with the price of gold going way up, they'll bring the price, or they'll at least equalize the price. It'll come to a plateau where it tends to ride. Well, silver's going to go there too, but I think that it's got to be somewhere in the neighborhood of a 30, 35, 36x from $35. Okay. Partially because of inflation. It costs more to mine it now. It costs more to explore it now. And the only way you can get that moving is that price of that silver has got to go up. It being a critical mineral means that the United States needs it. Well, not only we need it, everybody else does too. If they want to improve or even stay where they're at today. In our case, we want to reinvent our manufacturing or bring our manufacturing so much of that home. And we've neglected for the last 50 years, if you ask me, our infrastructure. And our infrastructure has to be brought up to par. And if you're going to do that, you need tons and tons of silver. And well, you need gold. I mean, you need some gold for investment, but you need silver, you need copper, both of which are going to be very critical to rebuilding this country. So copper investments are going to be good. I'm not sure I'd want to get in it until this bubble pops, but after the bubble pops, might be a very good time to get into copper markets or copper mine investing. In my opinion, it's a little early for anything that has to do with a stock. You got to I mean, in my opinion, things got to shake out first. Let it shake out, see where it's going, and then at some point, um, get in the market, even if it's just dipping your toes, get in the market. What I might suggest and what I'm doing somewhat, a little bit here and there as I get a chance, I'm investigating and looking at some of the best companies now. Some of the worst companies, the good thing about it is they'll be shook out. They'll be gone. If you're not a good company producing gold or silver now, when the markets shake out, you won't even be in business. Okay, and so looking at the best companies now, maybe the top five silver producers and the top five gold producers, top five copper producers, and going beyond that a little bit is platinum has just also been added to that critical materials list, and we produce no platinum. And most platinum is produced in South Africa and Russia. So we need to be making friends with Russia, and I think that's part of what Trump's doing, and working on getting some of them critical minerals that we need. And I think you'll see the United States stockpiling platinum as well. I'm not sure if it, but if you're, diversifying your mineral portfolio, and I think you probably should be, um, you might want to pick up a few ounces. At least some are recommending somewhere around 5 ounces of platinum, and at this time, platinum's not that expensive. It's gone up some, but it's still not that expensive compared to a lot of things. And if we're stockpiling platinum, everybody else is going to be stockpiling platinum too. Where the United States goes, others follow. So be aware of that. It may be a good thing to diversify into. I think you'll see silver make the biggest moves from here, mostly not only because of industrial needs, but because of investment needs. The average person has less than half of 1% of people in the United States today have any silver at all. But when in the next crisis, whenever that comes, they'll figure it out in a hurry, and then you'll see premiums go through the roof. In fact, it'll be very difficult to pick up physical silver. I'm not saying the supply is going to be gone or anything else. What I'm saying is there's going to be such a rush at the local coin shop, let's say, or the local pawn shop. There'll be such a rush that that'll drive premiums up. Over spot, you're going to be paying significantly over spot in the next crisis, and that crisis could be soon. It may be a year or two down the road, but whenever it gets here, physical silver that is available to the consumer is going to go through the roof even faster, because what's been happening for the last at least couple years is a lot of stackers, just to survive, are dumping their silver and even their gold. There's more sellers than there are buyers. Therefore, a lot of this silver and gold is going to refiners, and that's exactly what the big boys want. They want you to unstack at low price as possible. And if they've made your life difficult enough, you're going to destack, let's say, silver and gold at a much lower price than you should be. And that's what I'm trying to make people aware of. If you are a stacker and you're thinking this is the high or near the high and I better get rid of it now or I'm going to lose, I think you better do some research. I would highly recommend doing a bunch of research before you start getting rid of it for that reason. If you're getting rid of it because you needed to pay bills, well, that's why you stacked it in the first place. It is what it is. Do what you got to do, okay? But for those of us that don't need to pay bills with it and you're just getting rid of it because you think silver and gold's going down from here, again, I think you really, really, really need to do some research. I think you're going down the wrong path. I've talked to quite a few people. I like to talk to people about gold and silver, and most of them think it's overpriced right now and that it's going to be a pretty big pullback. I don't think so. Any pullback from here is going to be very short-lived. Yeah, it's going to be volatility. You're going to see a day where gold or silver goes up $1, and then the next day it comes back 50 cents and maybe even 75 cents. But then it's going to go up $2 and come back 75 cents. Whatever. It's going to be volatile. It's going to be up and down. But basically, the overall chart's going to be up and to the right. That's it. It's going to have to keep raising to get the whole thing about prices that gets silver flowing. The higher the price is, the more silver flows. They'll keep it at that level until it starts to wane, and as soon as it starts to wane, they'll have to let it go higher in order to bring more silver out of the woodwork. And because it can't, It's much easier to get you to destack than it is to get silver out of the ground. So it's going to go from consumers that have been stacking for maybe the last 40 years in some cases. It's going to go to the big players that all of a sudden I need it. I need to get out of stocks. I need to go somewhere. I need to get out of bonds. I need to go somewhere. And that somewhere is going to be gold and silver. And they're going to get you out of it as low a price as possible. And they're also going to make you afraid to get into it. Making you think that this is the top and it can't go much higher. So you're going to dump this and get Bitcoin, or you're going to dump silver and gold and get, let's say, a piece of property right now. Well, either way, they're going down in value or price, however you want to look at it. The other thing I want you to be aware of, and I just seen this yesterday, and I'm sure this happened recently, maybe over the last few days, that the market cap of silver just surpassed Bitcoin. That means worldwide, more people are investing in silver than they are Bitcoin. And that's at Bitcoin being at an all-time high. Or near an all-time high, just shy of an all-time high right now, actually. Think about that. Now, just like NVIDIA, I'm not telling you Bitcoin's going to zero. I'm saying I believe silver is a better investment. At some point, we're going to see a downturn, whenever that is, in stocks, and Bitcoin is going to act like a stock because of the hedge funds, the ETFs, and whatever else, and they're going to fleece you out of your money, and that's going to go back to, let's say, $20,000 a Bitcoin, and that will be the time when Bitcoin's at 20,000-ish, let's call it 20,000. And gold and silver at whatever dollar figure you want to put on it has plateaued. That's time to start to, even if it doesn't, if you look at it and you go, okay, gold and silver's plateaued, I don't think it's going to go anywhere from here. It's definitely, I don't see it going down because there's such a demand, but I don't really see it going up either, maybe just 2 or 3% a year. At that time is going to be the time to come back into stocks. When stocks have had, and I'm being conservative when I say a 50% drop, very conservative. I believe it's actually a lot more than that, but I don't want you to think I'm a freaking nutcase. Okay? I think conservatively, because of its bubble, it's going to drop by 50% conservatively. Is it going right to 50%? No, I don't think it's going to. Just like what happened in April, we dropped 20%. Everybody came in, bought the dip like they've been trained to. Big guys were getting out and selling into that rally, and retail was buying the rally. The big guys aren't buying the rally. The big guys are selling the rally, and the big guys are going to gold and silver. First gold, and now they're thinking, wow, damn, silver did pretty good too. And I think silver's got more upside because of the small market cap. Same thing I'm telling you. Gold's got an upside. Silver's got upside. I think silver's got slightly better upside. That's why I'm going to mostly silver. I got a little bit of gold too. I'm backing it up with a little bit of gold just in case I'm off on the percentages. But I'm heavy in silver, and I will continue to stack silver for those reasons. I think that's about what I got for today. I'd like you to take a second, give me a thumbs up if you like any of my videos, and if you like what I've got to say here before turning out, go ahead and do it right now, even if you missed the last few seconds of this video. Like this video, Subscribe if you're not subscribed, if you like anything I got to say at all. Uh, the thing about subscribing is the more people I have subscribe, the more this video gets pushed out to other people. So if you like what I have to say, click on that subscribe button. It doesn't cost anything. I'd like to see the subscriptions get up another 100 or so. That'd be nice. Not for monetary reasons at all. I really don't care. That's not why I'm doing this. I'm doing this for education purposes. I like to pass on my knowledge. A lot of people at the shop here come to me for knowledge. Sometimes on just useless shit, but that's okay. Like and subscribe if you would, please. I appreciate it. And take a minute just to leave a comment. You can say, I made it 45 minutes. That'd be great. I appreciate that. Or a thumbs up, even in the comments, because anything you do in the comments also helps push this video out. That's the way the algorithms work. The more likes I get, the more it gets pushed out. The more comments I get, the more it gets pushed out. You really don't have to say anything. Just put an emoji of some sort in there, even if you don't like it. Put an emoji in there if you think somebody else could use this. And yeah, I'm way beyond where you're at, buddy. That's fine. But there's a lot of people that are just starting to get it. It's going to take a minute, and there's going to be a lot more people coming into the space that really need to be educated on this space. I'm going to talk more about buying silver in the future. Right now, every day I watch a few videos that I think have to be talked about. So have a great day, guys. I appreciate it. Like, subscribe, and share. Thank you. Bye.